So you want how to know how to trade trend lines, but just don't have the right strategy. In this video today, we're going to be covering how to trade trend lines effectively. I'm going to have a specific strategy that you can use, and I'm even going to cover a really awesome automated tool that I created myself to trade these trend lines for me. So let's go ahead and dive in. So let's go ahead and start with how to trade trend lines. So this is going to be a full guide on exactly how to do this. So the first thing we're going to cover is the structure over indicators. And so trend lines are born from raw price action on the chart, not lagging mathematical formulas. So a lot of the times with whether it's MACDs or RSIs or whatever it is on the charts, a lot of these are lagging. A lot of these indicators lag behind. Trend lines are real. They are very much just right front and center, and the price is going to respect them most of the time. I'm going to show you some examples. So uptrends is a diagonal support connecting a sequence of higher lows. And so a higher low would be right here. So you see this in an example. A higher low basically would be the price goes up, come down, that's a higher low. Goes up, goes down, that's a higher low. Now you're going to want to connect those higher lows, and then the same thing with downtrends. You're going to connect lower highs, and so it's going to be like this: a lower high and then a lower high right there. And so hopefully that makes sense. So pretty simple. This is very basic trend line stuff, but I'm going to kind of get into more details here. So the line represents a shared psychology of market participants. So people are respecting that line. So precision in drawing. So identify the major swing points that stand out at the first glance. And so rule of two, it takes 2 points to anchor a line. So the confirmation, the third touch validates the trend line's significance. And so you obviously need 2 points. Once you get 2 points, that is going to be your trend line. After that, the price will start bouncing off of it and potentially break out. So avoid forcing lines through candles. Don't just be thinking that you can just draw them anywhere you want. You want to draw them at the correct points as close as you can. They're never going to be perfect though. The count matters. A two-touch line is a speculative hypothesis. To validate it, 3 or more touches confirm a market consensus. The more times a level is tested and then it holds, the more weight it carries. Stronger structure leads to high probability trading setups. You can see a nice little trend line right there drawn. As soon as it touched, it continues to respect this line. Once it continues to respect it, you see a lot of stuff happening, whether it's a wick, whether it's a bounce, or whether it's a really solid breakout. So there's a psychology behind it. Rejection at the line. When price approaches a valid trend line, look for a visible rejection. Long wicks or pin bars tapping the line, indicating that the orders are being filled and the structure is being defended. The rejection is a signal that the market still respects it. So you see this line right here, see this rejection point. This would have been your trend line right there, and it just rejected right off it. Same thing right here. As soon as it went to break it, it respected it, and then it finally did break it at this point. Came all the way back down, and it's still at this area was respecting that line. So really cool stuff. Trend lines are awesome. When you start to draw these on your chart, you're really going to see just how important that these are. Let's move on. So emotional chasing. So amateur traders often enter aggressively on the first candle. So as soon as it breaks, oh, I'm getting in. It broke the trend line, I'm in. Don't do that. Avoid that. And my software that I created actually avoids that for you, right? And I'm going to share that in just a second here. But to me, whenever you're trading trend lines, this is the most important aspect of it. You cannot just get in as soon as it breaks, because a lot of the times it could be a fake out. This often leads to fake outs when price snaps back to the original trend. Chasing momentum without structure confirmation is a recipe for unnecessary drawdown. See that right there? This could be even a good example of that. It could break out and then it could come right back in. Same with that previous example that I shared. So what is the strategy here? So exactly how can we trade these trend lines? Well, number one, clean break of a trend line structure. You're going to want to have a clean break of that trend line. As soon as it breaks, you don't just want to wait for one. As soon as it breaks, you don't want to get in, but you do want to wait for a clean breakout. And then number two, price pulls back to test the broken line. Old support line becomes new resistance. And number three, rejection at the retest confirms reversal. So confirmation ensures that you are trading with a new market direction. And again, if this is a little bit too much, don't worry. I have a couple live examples I will show you, but you can see this even right here, how it broke initially, it came back in. So this would have been a great entry point right there. As soon as it comes back in, get into this. This would have been a short position in that case. So risk reality. Nothing works forever. Structure fails at a natural part of the market cycle. A clean break with no retest and strong follow through signals a definitive shift in sentiment. Acceptance of loss is critical with trend lines. Structure first, entry second. That's the golden rule. Remember that. Write that down. Put it on a piece of paper. Put it on a sticky note. Structure first, entry second. You got to have the structure. Then you can go ahead and find your entries. A lot of the times, folks will get entries first and then worry about structure later. I've done it. I do it all the time, and I'm not, but it's easy to do. It's easy to get excited for a trade. But remember, you got to get the structure break and then confirm, and then you go ahead and get into your entry. So keep it simple. The keep it simple, whatever the statement is. But yeah, keep it simple. One chart, one trend line, zero distractions. Discipline beats complexity. Analyze, wait, and then execute. Analyze the first swing, wait to observe the reaction of it, and then number three, execute that trade. And so how do I go about all this on my charts on a daily basis? There is a gazillion amount of charts, right? And for you to, so I like looking at, I have a hot list of about 200 stocks. And for me to go and draw a trend line today, and then draw another trend line, and then draw another trend line, and then 2 days from now, those trend lines are old. They need to be redrawn. There's new higher highs, new lows. It's crazy, right? It's too much. And I wanted a solution. So what I did is I built a automated trend line system. Now this is going to be on my favorite platform. This is Tradingview. And if you are interested in this, there's going to be a link in the description as well. So go ahead and check it out. But essentially what I do is I will draw the trend lines automatically, and on top of that, it will detect the resistance at the top and then the support at the bottom. So essentially what that means, and I'm going to have a live example for you, you're going to want to target those. Those are the areas that you will target and where price will most likely retest. And there's one, actually, my alerts right there, so that's cool. So let's go ahead. What I want to do is dive into a live chart with this software. So the first one that I actually saw here is TWLO. This is Twilio right now on the 10-minute chart. And I just saw this and I thought, oh, what a good example. So you remember how we said when price will break this and then sometimes reject it. So this was that pin bar right there. This was the pin bar. It continued to reject it. And so here was finally where we broke out of this trend line. So you see how it tested it here and then tested it here. It finally broke out. But what happened so basically what happened here is a lot of traders are like, all right, breakout, I'm in, breakout, I'm in. All these traders right here, these are all traders buying, right? All these lines, everybody's buying right now, right? Retail traders are excited. It's bouncing, it broke out, right? And what happened? Boom, retested, right? And this isn't that big of a retest, but where smart money traders are getting in, if they are long here, they're getting in down here instead. And so now, because the price already broke, now if it does come back in, now they're already up on this initial break, and then once price breaks this, it's going to most likely head to the next level, which would be up here at this 41.40 level. So you see how the different mindset between that. And again, this is a 10-minute chart. My favorite charts really are the 4-hour charts, all the way up on the 4-hour charts. And I have a really good example of this on NVIDIA. And so, and sometimes it doesn't even need to come back into the trend line. So don't think that, all right, well, I have to make sure that when it breaks, it comes back in the trend line before I get in. You can do that. You can have that specific rule for you. But for me, if there is a overall trend shift, and so you see how this was from October 28th all the way to December 19th, this nice downtrend. This was a clear and concise breakout on this right here. So you see this nice green candle. That is a good sign. That means that at the end of that candle, that it was still bullish. It was still bullish, and in fact, it even gapped up right here. So this was a nice entry on this. It basically went sideways, and then finally, my software right here, see this breakout buy, it actually said, okay, we broke out of the trend lines, right? So this was the original trend line right here, and so it finally broke out, and it didn't even need to retest it, and then there's it was a continuation, decent volume on it, not great, not the best volume I've ever seen on NVIDIA, but it was a beautiful breakout. It did go sideways there, and that would have been a nice trade. So this would have been a case where you could have got, it would have been a good trade to get in there. But I purposely do not make it a habit to get in at those positions. And the reasons why is because it will do something like this, right? So this would have been the same case, and then boom, right back in, right? So again, two different scenarios, but for me, this was a beautiful trendline breakout from what was that, October 28th to December 19th. So this is quite a significant time frame, and this is why I like the 4-hour. This is why I trade the 4-hour on with trend lines, because they are just so well respected. That example that I showed you before, that was a 10-minute. So a lot of times on the lower time frames, you're going to see that pullback. Sometimes with these higher time frames, like 4-hour, once we break out and we'll go sideways. So something like this, where it'll go sideways a little bit, and this was still a really solid volume candle up. So this was a really solid green candle right there. And so the final step, and I'm going to actually show you this as well, is where could you place, so if you are getting in and you want to say, okay, I want to have a definitive stop loss and a take profit target. The easiest thing is to use the indicator. So I use my indicator. Again, you can map this out yourself, but you're going to want to go to the highest resistance point, and then the lowest support point. So this would have been right here. And you're going to want to have support resistance that makes sense. This one technically could maybe bounce off of this right here, but I would go, especially on this 4-hour. This is a 14% move. That's a really solid move up, and most likely it's not just going to go straight up, right? On a 4-hour chart, it'll probably do something like this, and then finally go up to target. But this is a really easy risk-defined trade, because we have support down here. So if it breaks the support, and if you need help with support and resistance, I have a ton of videos on this channel that you can go ahead and reference, but I'm not going to go too much into support resistance at this time. But essentially, this is a beautiful support zone, and then this is a really solid resistance point. Once you have this trade mapped out and risk defined, you can go ahead and go in it. And this is why I love the indicator so much, is because this whole thing was all automated, right? So this whole thing, now obviously I still have to take the trade. When I say automated, I mean everything was done for me as far as the whole structure goes. Because look at this. So this would have been 4 things that I would have had to draw all myself. So this would have been 1, 2, 3, 4. Kind of annoying, honestly, to be honest. And then when you have 200 plus charts that you're doing this on a daily basis, it gets a little crazy. Plus, I have a lot of other systems that I like to use as well. So it could get a little monotonous, right? And so that is why having automated software like this is so important, and especially on a platform that you are constantly using. So if you are a TradingView user, this is something that is going to be a game changer for you. It's been a game changer for me with trend lines. It'll be a game changer for you. I guarantee it. If you're using other platforms, obviously just do everything manually, right? You don't have to have an automated software. You don't have to have software to help you. But for me and for just the way that I structure things, automated software like this is where this was what I need. So again, so you can go ahead and check that out. There'll be a link where somewhere, it's comments, description, whatever like that. Let me know. Let me know if you have any questions. Was this easy enough to understand? Do you need more help trading trend lines? I have some pretty cool ideas on a whole structure of trend line videos that I'm planning on doing. So go ahead, leave a comment, say yes, I would like that, or no, this was good, whatever you would like. Just make sure you let me know. I really enjoy getting feedback, and just to understand what you guys would need with something like this. All right, that is going to be it for this video. Have a great day, and I'll see you guys in the next one.